Welcome back, investors, to Ticker Time News. I'm Adam. Thank you for joining me for the After Hours show. Boy, do we have a bunch to talk about. Roblox is hosting a party, a Metaverse party for the New Year's Eve with a special guest on a special island. We've got Nvidia showing strong GeForces for 2022. We've got sweet green, maybe not as sweet and as green for investors as maybe it could be. I also want to talk about Coinbase. It fell today, but so did Bitcoin. Not a big deal there. Of course, Coinbase is linked directly to Bitcoin's moves and cryptocurrency moves in the market, but we'll talk about that in a little more detail. But the most important thing to talk about is what's on your mind. If you have a question, leave the ticker symbol and your question in the comments, and we will go over it live during the show. So don't be afraid to ask. Anything is up for grabs in the comment section. So go ahead and leave your comments. We will talk about it, or your question, and we will talk about it. But until then, I have a list of stocks to go through that I would like to talk about. But of course, what's on your mind is the most important thing. So don't be afraid to leave a question in the comments. We'll look at the stock chart. We'll look at the financials if we need to, just based on your question. And of course, I don't have the answers to everything. So if I don't, I'll let you know. Otherwise, let's have a great show and a great time in the comment section for this live stream. Now, some winners today weren't real big winners. Up 4%, 3%, 2%, not really big gains. But on the leaderboard today, we have Winnebago. We have Thor Industries, 2 EV makers. We also have Weber. They make grills. And we have Vista Outdoors. They sell guns. So a lot of this outdoor enthusiasm in the market today for those type of stocks. We also have Camping World. Camping World is who sells the RV makers and their goods. So that was interesting to see that theme emerge in a market today that was just flip-flopping. It started out like we were going to have another green day in a row, and then things just flipped all of a sudden. So we'll talk about that a little bit as well. But don't forget, it was a special. It ended on the 23rd, but it is back due to how popular it was. If you have not signed up for Webull yet, it is a app just like Robinhood. As a matter of fact, this is what the desktop looks like right here with all of my stocks listed. But you can get 5 free stocks from Webull if you have not signed up for an account yet. It's super easy to do. Click the second link in the description or click the link in the chat, tickertimenews.com/Webull. Sign up for an account, and here's the cool part. Deposit any amount, $5, $10, it doesn't matter, and get your 5 free stocks. It is so simple to do. It is free money and takes very little effort to do. So take advantage of Webull's 5 free stock offer. And this does end on December 31st. So you have until the end of the month to claim this. Okay, let's jump into this. I'm going to hop over here to TradingView, and I'm going to pull up the S&P 500. There's Ambarella. We've talked about them before. They've been bouncing around. They're up quite a bit since the 1st of December, about 14 or so percent. Since we first brought them up on this channel during one of our live streams. There is an individual video about Ambarella out there if you want to take a look at it. But SPX is the ticker symbol that we use for the S&P 500 on TradingView. And there is a link in the description for a free account. Now, if you look at this, we have this dip right here below the 50-day moving average, and then an immediate bounce back the very next day. And then we went on this 4-session rally right here. That was really nice. And then today we get to this all-time high intraday, and then things just fall apart. So stocks today, they were mixed. They ended the day mixed amid low liquidity as investors continue to weigh the impact of the Omicron variant and what it will have on the economy. The S&P 500, it swung between small gains and losses to lose 0.1%. You can see that right here on the right-hand side of the chart here at 47.86, down 0.1%. After setting its intraday record high above the 4,800 level. And that was earlier in the day. Now, the Dow added about 80 points, extending its recent rally for the 5th consecutive session, while the NASDAQ, it fell 0.6%. It was one of the really technology. Just didn't do so good today. Now, global COVID-19 cases did hit a daily record yesterday, with many countries imposing restrictions and several studies suggesting that the new strain is highly contagious, but causes less severe illness. It's the common cold, right? That's what it seems to be like. Now, on the corporate front, Walt Disney, it was up 1.5%. Boeing was up 1.4%. And Walmart up 1.3%. They were among the top performers today. While Dexcon, it was down 6.7%. Sorry to say, but it led the losers today. It will be a soft week in terms of economic releases, but stocks, they typically rise in the last few days of the year, mainly due to lower volumes. We have lower volumes than we typically do throughout the rest of the year, the last week or the last few trading sessions of the year, which makes any move in the market more pronounced. So you'll have wider swings in the market due to less volume. And you can see here for the S&P 500, even though we had this 4-session rally, every day volume went down lower and lower and lower. That's the bars you see across the bottom of the screen here. Even today's selling, it was less volume than yesterday by about 100,000. So we had volume at 1.3 billion for the S&P 500. The average right now is all the way up to 2.4 billion. So you can see that the volume levels during the last week of trading are typically lower. So keep that on your radar for any trades or investing you do for the rest of the year. Now, 7 of the 11 S&P 500 sectors closed in positive territory, with the utility sector climbing 0.9%, and they did claim the top spot with that gain of 0.9%. The information technology sector, that fell 0.6%, which led the market higher yesterday, but slipped into the lagging position today with its 0.6% decline. Now, travel stocks saw some relief today following the updated CDC guidelines on maybe the hopes that there will be less Omicron-related disruptions. Now, I believe the waiting period was 10 days from the CDC. Did they cut that in half down to 5 days? Fact check me on that one, but I believe they may have lowered it just down to 5 days now that you have to wait after being in contact with somebody. So fact check me on that, but I do believe it is 5 days. Now, the S&P 500 right now, it stands at 27.4% year-to-date gains. That is a great year for the S&P 500. That'll be tough to beat in 2022. Now, the NASDAQ is in second place, up 22.5% year-to-date. Dow Jones, it's up 18.9% year-to-date. And the Russell 2000, it's the lagger. It's up 13.8% year-to-date. Okay, let's hop over and look at Bitcoin, because boy, did we have a reversal. BTC USD on the chart on TradingView. Let that load there so we can all see this. We had this yellow shaded area here, this box, right, where Bitcoin was trading around its 200-day moving average. And then on the 21st of December, which was last Tuesday, we had a nice 4.2% rally in Bitcoin, bringing it above its 200-day moving average, above its ascending trend line. And then we kind of traded sideways for a day. And then we had another 4.6% pop on December 23rd. And then during the holiday season, 24th, 25th, 26th, and 27th, traded sideways. But we were up to $52,100. I believe the highest we got was 52,800 or 52,000 or 51,000. I mean, 51,900, I believe, was the high over this little extended weekend that we had. Then today, boy, oh boy, 6.3% down today, and we are at 47,500 right now. 47,500. And it just keeps slipping. As a matter of fact, today's low is 57,300. So we are just 100 and some odd bucks from the bottom. Now, where could support be? Well, I find this interesting. Right now, the 200-day moving average that it was flirting with for over a week ago, is sitting at 47,713 right now. So it is just below that 200-day moving average. That is interesting because that's where we sat most of the time over a week ago, right around that 200-day moving average. Now, the 200-day moving average is up a little bit higher than it was a week ago, but not by much. We're at 47,713 today. A week ago, we were at 47,214. So just a few hundred bucks, maybe 500 bucks above where the 200-day moving average was a week ago. And that's just because Bitcoin had that nice rally and then kind of plateaued and held that $50,000 to $51,000 range. Now, can it get back there? I don't know. I really don't know what's going to happen. I made a mistake. I got all wrapped up in the 75,000 by year end mentality, and that's just completely gone. I mean, we lost that script a while ago. Back right here at the top of this wedge, when Bitcoin hit its peak on November the 10th of 69,000. I thought when we were at 69,000, 75,000 didn't seem that far away. I thought it was doable. But I was wrong. So that's my mistake to own. I did not foresee what is now taking shape in cryptocurrency and Bitcoin. Now, Ethereum, let's hop over and look at them. ETHUSD, let's look at Ethereum here. Let it load there. Now, I use Coinbase here for the data and trading view. Ethereum is in a downtrend. Now, it had a nice little pop, just like Bitcoin did, and it got to a high of 41.57. It's now back down to 38.07. 38.07 is where it sets right now. And that is just above this trend line here, ascending trend line. And that's kind of been around the bottom for Ethereum here. So 37.08, I'm sorry, 38.07, dyslexic, just read that backwards. And then here we have a low of 36.99, a low of 36.43, 36.87, and 36.60. So that's the kind of lows that we've been getting to for Ethereum along this ascending trend line here. So it'll be interesting. And then, of course, the low today is 37.60. So we're up above that just a little bit here. But Ethereum is along this ascending trend line. Can that hold? That will be the question that I'm watching. Now, I still believe that Ethereum's biggest move, even though it's up 415% year to date, that is a gain worth holding. That is a gain worth holding. 415% year to date for Ethereum. That's outperformed Bitcoin by 4x, right? It's outperformed the regular market, the S&P 500, the NASDAQ, the Dow, the Russell. Ethereum has outperformed them all this year. And I still believe that Ethereum will outperform next year because Ethereum has a big catalyst next year, and that's its update. That will happen in the first half of 2022, potentially happening in the first quarter of 2022. So Ethereum is on my radar for being an outperformer next year. Okay, let's talk about a couple of stocks that could really be outperformers excuse me, in 2022. The first one that I want to talk about is Roblox. Ticker symbol is Rblx, Roblox. Now, Roblox has been in the news recently due to all of this Metaverse talk, right? Well, here's Roblox for 2021. Let me get it up here. It went public back here on March the 10th. It got into this wedge pattern, symmetrical triangle, and on earnings, it broke out. It had a big run, a huge run up, over 40-some% for this run right here. The gap up and then the rally. And then it's been falling ever since. And for the past week or 2 weeks, it's been hanging around its 50-day moving average, just above it, just below it. And it's making, some big moves. Today, it's down 5.9%, 0.2% in after hours. So 6% on the day, down 6%. We have it up 3%, right? We have it up 4%. We have it up 8%. We have it down 2.8%. So it's been moving pretty rapidly. Now, year to date, let's look at this. Year to date, since we're at the end of the year, we want to look at this. Now, TradingView does not have it. So I will measure it. Let's go for the opening price here. And we go to its closing price today. And it's up 53%. So Roblox has outperformed the market. That's a good thing. 53% since March the 10th. Now, let's open our imagination up for just a moment, okay? Let me ask you this. What do online gaming platform Roblox, the Metaverse, and the famous, for being famous, celebrity Paris Hilton all have in common? Any guesses? Well, this New Year's Eve, all three will come together as Paris Hilton hosts a party on her Paris World virtual island exclusively on Roblox. This further keeps momentum in Roblox's corner as it continues to transition into a leading metaverse play rather than just some online game, right? Paris Hilton's virtual bash will include her Roblox, think in the metaverse, right? And a robot, okay, will feature her Roblox avatar playing DJ, right? Playing a bunch of different types of music for anyone who wants to spend their evening in a virtual party instead of celebrating New Year's Eve in the real world. Now, according to a report from Reuters, Hilton said the metaverse is somewhere that you can go to do everything or anything that you can do in the real world in the digital world. Hilton went on to say that her Roblox party is her way of giving people the ability to have experiences they may not, getting tongue twisted. Slow down with my thoughts here. You can see it's been a couple of days since I've done a live stream. Those nerves are back that I always talk about. But anyways, that you may not be able to do in their real world lives. Hilton said, that's what we've been working on together, talking about Roblox, over the past year. She's been giving them inspirations for what she wants the world to look like, her island in the metaverse. Of course, Hilton isn't doing it all just for free. Among her many endeavors, Hilton reportedly gets about $1 million to serve as a celebrity DJ for high-end parties in Europe, Asia, and the Middle East. And visitors to Hilton's Roblox party on New Year's Eve will, of course, be able to purchase digital items like clothing and experiences in Paris Island. Now, Roblox will also have, and this is separate from the Paris Hilton news, but Roblox will also have a fashion retail experience too. Virtual Brand Group, which is a company, a metaverse creation company that accelerates global brands into the metaverse, and iconic fashion brand Forever 21, a brand owned by Athletic Brands Group, announced an exclusive partnership to build a fashion retail experience on Roblox. Yeah, this all new experience called Forever 21 Shop City is designed to allow Roblox users, fashion influencers, and creative world builders to own and manage their personal store in the metaverse, right? This is so cool. Now, Roblox is a major player, and I believe it will be a crucial building block for the metaverse and our digital experiences of the future. Remember, November metrics for Roblox, they were very strong. And the sell-off, I'm not sure it's justified. Because remember, with the November metrics, Roblox showed a 35% year-over-year increase in daily active users, DAUs, to 49.4 million. That is a lot of guests visiting daily. If you want a real-world example, here's one for you. The average, or I should say, an average of 250,000 guests travel daily to and from various Disney World properties. 250,000 versus 49.4 million. That is a humongous difference. 250,000 visit Disney World properties on a daily basis, and that was pre-pandemic numbers, so that's pretty big. I think they've whittled that down to around 51, 52,000 daily right now. But 250,000 before the pandemic would visit Disney World properties on a daily basis. But Roblox is getting 49.4 million daily active users. That means people visiting a Roblox property on a daily basis. Walt Disney would love to have those numbers. I'm not sure their parks are big enough to accompany 49 million guests, but they'd still love to have that number. So when you look at it like that, any business can see the profit potential. And that's why I see the profit potential in Roblox. Carlos, how's it going? I'm so sad today. All my trades were red. Today was a rough day. I had high expectations in GME and NEO, for example. Yeah, NEO, not so much. After their NEO day that they had, it was either the Saturday of the 18th or the 11th. I can't remember which one. But after the hype from NEO day, that's when you should have expected a turnaround in a downtrend in NIO. Usually after a company has big events like that, there'll be a drop off afterwards. So if we look at NEO here, the 21st, yeah, so it would have been on Saturday the 18th because the markets are closed on the weekend. So on the 21st, which would have been a Tuesday after its NEO day, that's when you could have expected the run up. And it had a nice few day run there. 7% pop after the news from NEO day, another 1%, so that's 8, and then another 2%. So we're up to a 10% pop in NEO after NEO day. And then on the following day was a red day. It actually ran up to over $30 a share, and then sold off from that high. And then today, yeah, it shifted. It was down another 1.1% today. So NEO is one that probably won't be doing too good for the rest of the year because there are no other catalysts for them besides the NEO Day announcement that they had. And then I'm lost for tomorrow. And let's see, in GME, GameStop is one. I do not participate in GameStop because it can have real irrational moves. Now, it has been locked in this range right here for the majority of the year. Since March, GameStop has flirted with this low around $146 to a high of $225. So it's at that bottom level of the range right now, but it moves so irrationally without any fundamentals that I just stay away from it because you never know what type of day it's going to have. GME announced NFT marketplace. It was good today, then finished red. Yeah. Announcement like that on GameStop, which is already at a very high multiple and a very high valuation, even good news like that isn't enough to fundamentally hold the stock up because the valuation is stretched really, really far. I mean, it's got a market cap of $11.1 billion right now where it sits. And if we go look at earnings here, their earnings came in at a loss of $1.36. So they are going through a lot of money right now, which isn't a bad thing. They are setting up for what they believe the future will be, but that valuation is just really, really rich. And I mean, if you got in at the beginning of the year, yeah, you got nice gains of $677 year to date. But that's one reason why GameStop right now is at this humongous overinflated valuation. Just keeping it honest here, I'm just not sure the logic is lost on me on GameStop. But yeah, for a company that is going through a transition, to be up over 600, almost 700% year to date, that is a huge valuation, and they're going to have to grow into that. So I don't think it's going anywhere anytime soon, except for maybe south with its price. Let's see. I got in at 154. Yeah, that's 154 puts you right about the towards the bottom of this range, which maybe I could see if enough retail investors got back involved with GameStop, with it being at the bottom of its range, that maybe we could see it run up to the top of this range again. But I'm just not sure what 2022 is going to bring, because you have to remember, in 2022, we are having the Fed is going to raise rates. Therefore, the dollar is being debased. The dollar is becoming worth less. So a company that's got, $1 billion in the bank to transform itself, that $1 billion in a year from now is going to be worth a lot less. So companies like GameStop, who are considered a growth company now, with it doing a transition so it doesn't go out of style like Blockbuster, and can become the Netflix of NFTs, it's going to take a long time to get there. And if you believe in it, then it's a buy and hold, or a buy and trade when it gets up to the top of this range that it's been in, if it can get there. I'm just not sure if it can. Thanks for your thoughts. What do you think about the TAN? I like TAN. That's your solar Invesco solar ETF. It is at the bottom of its trading range that it's been in right here. And if we scrunch this up a bit to look at a little bit of last year, you can see it went on this big run up last year, right? And it got to all-time highs. Then it simmered down and it got into a trading range for the majority of the year. It pulled off a symmetrical triangle, and then a pop, and then this sell-off. Now, it is under its trading range. Now, I believe 2022 is going to be a year of people who make things. Nvidia, for an example. That's a company who I think has room to move and grow in 2022, because they make something. Any company that makes something is going to do better in 2022, I believe, than any other type of company. Because I think in 2022, investors are going to want that money now. That they're going to want that sale now. They're going to want that profit now. They're not going to be paying for high growth companies that may have a profit in 10 years. I think investors in 2022 are going to want that profit today. And companies that make something are going to give that profit today. Apple, for example, that's a company that makes something, but they also have half of the company that is into software and development and new things. So that's kind of 50-50. Plus, it's got a pretty high valuation at nearly $3 trillion. So I think they may have peaked. Now that I'm thinking about it a little bit more. But Nvidia, that's a company that is making something. There's software on a chip, GPUs. They're making something that they can sell today and make a profit today. That's the type of company that I think is going to win in 2022. Growth companies, I think, are going to suffer a little bit. the gains that we saw this year, I think, are going to be pretty hard to top next year. But I still believe that this is a strong market. The S&P 500, it almost closed at the 70th record high of the year. Almost. Until that reversal came in this afternoon. Intraday, it broke above new all-time high. So it almost closed at the 70th all-time high. That is a lot for 1 year. So I think there may be a slowdown in 2022, and we won't see as many big blockbuster returns for the year. I think it'll be a year that the returns are going to be a little bit smaller than they were this year. Let's see here. So yeah, TAN, I like TAN because I like the solar industry. But if I were to pick a individual company, it would be Enphase. That would be one. And the second one is Generac. Those are the two companies in the solar sector that I like the most. Absolutely. Enphase has the inverter that nobody can touch. Generac has got generators in so many different homes, and they are bringing in their own inverter. They're bringing in their own Tesla-type power wall. So I think those are the two companies that will do the best in solar. But having it in an ETF in a basket, that's a safer way to play it, and TAN will cover those different companies in the solar industry. And if we look here, I mean, this has been a pretty steep sell-off. So getting in on TAN now isn't a bad move for a 2022 play. You're buying it at the bottom of its trading channel. That's a good thing. And if we look here, if we scroll back, the two bottoms right here, we could almost, I could put a line here, right about $68. That's probably the low. We saw it here back on May, the middle of May. And then in its rally last year, we saw it in November and October. It pulled back and test this $68 level. So this would be a level that I would set a stock alert for. And maybe, just maybe, you could get in at a price at $68 a share for TAN. So I would put a stock alert right there on TAN for $68. If you can get it below that, I think that's an excellent entry point. Right now, what is this line on? It is on $78. So that's a $10 difference right there. Anywhere in that $10 range, I think is a good entry point. Of course, the closer you get to the $68, the better. But that range, that $10 range, that's a good entry point for TAN, my belief. Let's see here. High expectations also. I will try to get out at 160. Stop loss 135. If chip shortage end, can it be bad for Nvidia? Yeah, Solar Edge is one that's on my list, but it's not top on my list. Enphase and Generac, those are the two at the top of my list. But Solar Edge is not bad. It's decent. As a matter of fact, in my solar, where's my solar? There we go. In my solar energy list here, let's pop this out. I've got Enphase, Sunrun, Sunnova, Solar Edge, Canadian Solar, First Solar, SunPower, and I threw Tesla in there at the bottom for their solar and Powerwall. More to do with the Powerwall than their actual solar business. But in phase, let's see here. Okay, I was just looking. So percent change for Solar Edge down 2.3%. So that is one of the more expensive out of the three, or out of all of them here. A $15 billion market cap, which is smaller than Enphase's $25 billion market cap. So I would put that in second place for strictly solar. Let this load here for a second real quick. Oh, well, there we go. Okay. I want the full chart, not the little chart. With that load, go back here and close that. Okay, let's look at Solar Edge. Wow, it's been a while since I have looked at Solar Edge here. I haven't looked at them since that pop out here. Symmetrical triangle and an uptrend, bullish. Yep, we had the breakout and then the pullback. RSI is at 39 right now. It's in between the upper bands. Okay. So I have Solar Edge here at 262 on the bottom end of this range, this upper range, but it's at the top end of this lower range that it traded in for about 1, 2, 3, 4, 5, about half the year it traded in this lower range. So as we get into 2022, we could see it come back down to it. It wouldn't surprise me. It wouldn't surprise me. All right. Let's see here. See Solar Edge, they've just on their earnings, they have missed the past 4 earnings. And they've lowered the guidance for their next quarter, which reports on February 17th. So for them in particular, it's not looking too healthy right at this particular moment. And they're down 12.6% year to date, which could put them as an underdog. Let me pull up those financials real quick. Go to quarterly. All right, so we've got price to earnings ratio and price to cash flow. So price to earnings ratio. Last quarter put them at 100 times. Interesting. Okay, so you can see here the red dots here right above my head in the upper left corner. These are the past 4 earnings that they've missed. Now, they have been going up 33 cents, 55 cents, 82 cents, and then 96 cents. And next quarter, back down to 85 cents. So in line with Q2 21. And then this net profit right here, it took a big hit at the end of last year in Q4, but it has been coming back, but nowhere like it was in Q3. Let's see, balance sheet has been improving. So they've got more total assets. That's good. If we look at the income statement on a quarterly basis, we've got total revenue last quarter of 526 million. Okay. Gross profit, 10.4%, down from 11.5%. 26.9% in Q1. Wow, that was really nice. Cost of goods sold. So to bring in 526 million, they had to spend 353 million. Okay. It's been a while since I've looked at their actual numbers. Interesting. Okay. All right. So they're a bit pricey, and I think they could come down more, quite frankly. Into this bottom range down here, 262. 262. That's the bottom of this upper range. And that's where they came down and kind of bounced off of on December the 20th. Which puts them, which would put them below their 200-day moving average, and they're closed today at 178.82, is just below their 200-day moving average. So right now they're looking pretty weak. Technical. All right. So I can talk about Nvidia a little bit to kind of give you my idea on where they're going, because I saw you brought Nvidia up. Let's see, about chip shortage. If the chip shortages end, can it be bad for Nvidia? No, because the chip shortage, I don't think is going to end. I think it can soften some, but I don't think that the chip shortage will end necessarily. NVDA. Let's look at NVIDIA. Now, I do have some thoughts here on NVIDIA specifically. Now, I dug into them today a little bit deeper. So if we look here on the chart, they were in this ascending trading channel for most of the year, since March. And then they took this gigantic run all through October. Then they kind of flatlined there a little bit. In November, December, had this like W-shaped run right here. It was really, really violent moves. But then they bounced off their 50-day moving average, which is at the top of the range here. So they're almost in this position where either they're going to come back down into this range, or they're going to start to form a new range that's going to be a little bit on the higher side. Now, Nvidia crossed over that $300 mark again today, even though they were down 2%. They got as high today as 313, so they came down $10 from today's high. They have an all-time high of $346, so it's pretty steep right now. And even with today's fall, the RSI is still at a 53. And Nvidia tends to run a little bit on the hotter side on relative strength. Man, a lot of semiconductors did kind of poorly today. I believe the entire semiconductor index was down 2% today, just like Nvidia was down 2%. But Nvidia, and again, that ticker symbol is NVDA. It's a name that I think will benefit from strong, let's call it GeForces in 2022. A word play off of one of their products. Now, I have a video coming out for Patreon members with a 2022 stock idea on my view of the housing market remaining robust in the new year and remote work continuing to gain popularity. Now, both Nvidia and this, we'll call it a mystery stock for now, they were primarily ignited due to the pandemic. Now, Nvidia is a system on a chip, SoC. They're a giant in this. And as a side note, Ambarella, ticker symbol AMBA, they're a smaller SoC, software on a chip company. It's appreciated about 14% for December. And I talked about them back at the beginning of December. So that video is worth a look if you have some time, because Ambarella and their chips, specifically their cameras and the software on a chip idea, are really going to become more popular. They have a big array. They work with Rivian for their cameras for autonomous driving. But I've just brought them up real quickly because they're a smaller company that does software on SoC work like Nvidia does. But back to Nvidia. Its SoC with its graphics processing unit, or GPUs, are being what I would call intertwined, right, with numerous markets, like, for example, the gaming market, or professional visualization, automotive, data centers, right? Although a huge catalyst for Nvidia is the ARM acquisition, it's unlikely to pass regulatory scrutiny, though. And many other catalysts could push Nvidia higher. One catalyst for Nvidia involves the pandemic-fueled shift to go digital. This involves moving many aspects of a business to the cloud, which typically lives in a data center, and this is where Nvidia comes in. So the company, Nvidia, is mainly focused on hyperscale data centers, which are used by cloud titans like Google, Microsoft, and Amazon. Nvidia supplies GPUs for these data centers, primarily to enable reasoning in AI. And over 25,000 different companies currently use NVIDIA AI, giving NVIDIA a massive advantage over competitors to continue to increase adoption going forward. Now, although NVIDIA in their automotive segment only comprises of about 2% of total revenues, I think as supply begins to slowly catch up to demand in the automotive industry, which Ford and General Motors both believe should happen sometime in 2022, this segment will be one of the fastest growing for NVIDIA. And this is mainly due to the company's SoC, software on a chip, enabling robust driver assistance and safety features, which more automotive makers or manufacturers are adopting and making standard. Nvidia also has over 370, fact check me on that one. I believe it's 370 partnerships, ranging from car manufacturers like Tesla and Volkswagen to robotaxis like Didi, ticker symbol DIDI, and suppliers like Bosch, giving it a solid position to benefit nicely in the year ahead. Now, Nvidia's gaming revenue, which is another potential catalyst, should continue to see massive growth in 2022, as the demand for gaming is not likely to cool off anytime soon. I'll give you an example. Game publisher Take-Two, ticker symbol T2, TTWO, has already seen demand levels remain elevated even after many parts of the world have kind of returned to some sort of normalcy, right? As a result of this, Take-Two, it expects record quarter in fiscal year 23. In addition to that, I would say in late November, both HP, ticker symbol HPQ, and Dell, ticker symbol Dell, DELL, they both noted that supply constraints have continued to be a problem for personal computer sales, right? With that, I expect Nvidia's gaming revenues to get a boost in 2022 due to the increased computer sales as the supply chain normalizes. So, kind of an opposite of your comment there or question, if chip shortages end, can it be bad for Nvidia? And due to the backlog, no. I think that can be a benefit, a catalyst, if you will, for Nvidia. So, despite Nvidia having a monster year, and if we look over here to the right hand side, Nvidia was up 132% this year. That is a huge beat to the market. 132%. That's big. It's more than doubled year to date. 132%. So I think 2022 will be a continuation of this momentum for Nvidia, especially given the multiple high growth industries in which Nvidia operates. The stock does trade at a pricey valuation. I'll give you that, at 59 times fiscal year 23 earnings, a significant premium. If we look at AMD, I think they're at a 35 to 37 times. And then Intel, which is just the bottom of the bunch, I think it trades at like a 10 to a 13 times. So pretty valuation for Nvidia, definitely. But in many cases, Nvidia has I would say, a technological advantage over its competitors. And with the markets, Nvidia has successfully gotten into a bunch of markets that will only accelerate their adoption of Nvidia powered technologies. So I think the premium for Nvidia is justified by its catalyst for next year. I don't know if it'll do another 132%, but I do believe Nvidia will beat the market again. So I guess for Nvidia, its pullback today of 2%. If it could get back down to its 50-day moving average, which right now sits at $288. If it could get back to that level, sub 300, maybe as low as 275, I think that would make for good entry points for Nvidia. So set a stop loss. Not a stop loss, not yet. Set a stock alert for Nvidia at 300. It breaks that. Watch it. If it's showing weakness, set another stock alert, maybe 288 at the 50-day moving average or 275, and see if it can come down to those levels. Those would make much better entry points. And always remember, when you are in a trade, which I don't think I would trade Nvidia. I think I would be investing in Nvidia for the long term. This wouldn't be a trade for me. When you are starting a position or you are trading, it is very important to set a limit stop loss. That prevents you from over losing. Okay. If you set a limit trailing stop loss, if you're expecting it to rise, then if, for example, if you have it set at 5%, if the stock runs up 10%, then your stop loss will move up with it. And then once it falls 5%, that's when it will trigger to sell your position. That's what a trailing stop loss does. Whatever percentage or even dollar amount, once the stock has risen, that it falls, then it sells. Or if it just automatically falls, then it sells too. So I like using the trailing stop losses because it captures the gains that the stock has made. So just an idea for you. Let's see here. Okay, we talked about SolarEdge, talked about Nvidia, the solar market, talked about TAN. All right, cool. I think we got, we talked about GameStop. We talked about NFT. Cool. All right, awesome. Great questions, Carlos. Great questions. Any others, just keep them coming. Okay, I'll just keep rolling now. I'll just talk about, who do I want to talk about next? Nvidia, Rblx, Sweetgreen. SG for Sweetgreen. All right, Sweetgreen is now back to $30. It hasn't been public very long, so there's really not much here to talk about. But if we want to, kind of like Braze, where it had this, where do I want to put this? Where can I get the touch points that I want? Maybe right there. I think that gets me. I think that's the right amount. And there's really not much of anything I can make out of this. This is the problem with companies that haven't been public very long. They don't really, you don't have much to go off of for really any technical structure. But maybe that's something that could be forming for it. But with Sweetgreen, ticker symbol SG, Sweetgreen has been neither sweet nor has it made a lot of green for investors since it made its much hyped IPO debut last month. This, I would say, early stage restaurant chain, which focuses on salads and bowls, had an early jolt of enthusiasm when its IPO priced at $28, above the expected $23 to $25 range. But then it opened at $52. Unfortunately, the timing of the IPO was not great, as the stock fell in late November just as Omicron started to make headlines. I wanted to add this stock to your watch list because it's now back around its $28 offering price, and the stock has stabilized over the past month around the $30 area. It's at $30.84 today. Although that was a nice 12% decline, because yesterday it had a big 11.7% up. Really big run up yesterday. So all the gains yesterday were lost today, but that puts it right back around that $30 level. Now, the concept is pretty compelling, as it's a play on consumers who want to eat healthier while offering the convenience of a quick meal. Sweetgreen's goal is to reimagine fast food for a new era. The company argues that most large restaurant chains have not evolved quickly enough for the higher demand for healthier foods, which has created an opening for Sweetgreen, which believes its industry is ripe for disruption. It's still small with just 140 locations, but it also has a significant digital component, making the company larger than just its storefront. The fiscal year, or I should say, for 2021, year to date, the majority of its sales, 68%, came through digital channels. Most restaurant chains would be envious of that number. Also, Sweetgreen has aggressive expansion plans, with at least 30 new restaurants in 2021, and it has a goal to double its current footprint of restaurants over the next 3 to 5 years. Its menu has been designed to be delicious, customizable, and convenient, allowing customers to make healthier choices for both lunch and dinner. It currently offers signature salads, warm bowls, and plates that are complemented by a seasonal menu that changes 5 times a year. Sweetgreen has also been expanding the menu, recently adding warm bowls, sides, and plates. Further menu expansions into new categories like broth, soups, desserts, and beverages are also in the works. Sweetgreen may branch into consumer packaged goods also, such as dressing, sauces, and packaged produce. Its same-store comps have been quite strong. After averaging about 10% from 2014 to 2019, it dipped in 2020 due to the pandemic to a loss of 26%, but bounced back to 21% in 2021. Those are good comps over the past year and the years before the pandemic. Bottom line is, I wanted to bring up Sweetgreen just to highlight that the stock stopped its fall and has stabilized in recent weeks, just north of its $28 IPO price. I like the story and its growth potential. And of course, the focus on healthier foods, which is, in my opinion, an underserved market in fast food. However, it's not entirely a clean story, though. Sweetgreen is mostly focused on expanding its footprint, so reaching profitability will take many years. Current analyst forecasts are calling for losses as far out as 2025. Also, the valuation is pretty stretched with a forward 2022 price to sales of 6.5 times. One more thing. I'm also a bit concerned that Americans are going to eat like Americans. Do enough consumers want to eat salads? Well, if we look at McDonald's still has not brought back salads. Why? Presumably because fast food consumers are not demanding it, which makes me a bit nervous for Sweetgreen. With that said, I do think the healthier food segment is underserved, and that does present an opportunity for Sweetgreen. However, I think Sweetgreen is likely more of a niche filler than a mainstream concept. But what do you think about Sweetgreen? Do you think its expansion plans to add or double its storefront in the next few years is a good call? What do you think about that digital footprint? Maybe it is just a niche type of company or niche, however you'd like to say the word, how to pronounce it. Tomato, tomato, right? Well, that's Sweetgreen. I see an opportunity, just not a mainstream one. But I would like to hear from you. What do you think? Okay, let's talk about Coinbase. Ticker symbol CON. COIN. Don't forget the I in coin. Coinbase, oh man, it is a truly, truly wobbly. Look at this all-time high set during its IPO. There was so much hype for Coinbase in crypto back in March and April. I mean, April is when Bitcoin hit a all-time high. So did Coinbase right out the gate. And then Bitcoin hit its all-time high of 69,000 last month. Look who peaked last month. Coinbase did. Right before earnings. And I should put a vertical line there to show that. It peaked during those earnings. Now, you go back to earnings before, right there, and there was another sell-off. Go back to earnings prior, another sell-off. 3 times in a row. Earnings, sell-off, earnings, sell-off, earnings, sell-off. You think investors are catching on? Coinbase has got some potential, but not as only an exchange. Coinbase Global, ticker symbol COIN, has come under intense selling pressure as Bitcoin prices reverse course from yesterday's solid jump and the holiday high, as I call it, for Bitcoin. With COVID, I don't know. COVID's not part of this story. With Coinbase deriving nearly all of its revenue from the buying and selling of cryptocurrency on its exchange platform, the stock tends to mirror the broader crypto market, which continues to be incredibly volatile. However, this volatility acts in Coinbase's favor as it boosts the number of monthly transacting users, or MTUs. Some investors don't catch that part. When prices remain stable for Bitcoin or other cryptocurrencies, trading volumes tend to be fairly small, right? If the coin is remaining flat, then no one's trading it. When the coin's going up and down, then everybody's trading it. This is primarily why the company missed on Q3 earnings and revenue. Now, Coinbase benefits much more from a surging crypto market than a lagging one, as more MTUs will flock to the platform when prices keep going up. Also, during Coinbase's Q3 earnings call in early November, because the crypto market was currently hot, the company bumped up its fiscal 21 outlook. Coinbase forecasted its fiscal year 21 MTUs to a range of 8 to 8.5 million. Coinbase also noted that Q4 was off to a strong start, with volatility in prices both up in October. As a result, the company predicted that Q4 MTUs would be higher than in Q3. Therefore, with Bitcoin struggling to recover from a massive dip earlier in the month that wiped out 20% of its valuation, by the way, Coinbase is equally seeing significant selling pressure. Now, Coinbase has also made strides in diversifying its revenue stream. For example, in Q3, the company posted a 41% jump quarter over quarter in its subscription and services revenue. Coinbase also pointed out that 28% of its retail MTUs also engaged with a second product on the platform, such as staking, earning, borrowing, or lending. Coinbase also noted that these products and services are just the beginning, and it plans to launch more in the coming quarters in a further effort to reduce its dependence on the crypto market. Overall, with Coinbase not reporting Q4 earnings until possibly March, there is still plenty of time for the crypto market to see a solid recovery. But in the short term, the sell-off happening in the crypto space may continue to keep a lid on Coinbase from getting back to all-time highs and its high from early November. So what do you think about Coinbase diversifying itself away from strictly the exchange, buying and selling different coins? And do you agree, or can you see the relation to a hot crypto market to the rising price per share for Coinbase? It's an interesting one to look at. This is definitely an interesting case study as well. Coinbase and crypto. Let me know in the comments what you think. Because that's the most important to me. I could care less what I have to say. But knowing what you think helps all of us. Okay, let's talk about one catalyst for tomorrow, Wednesday, December 29th. It's a SPAC, and I know SPACs haven't been most of the SPACs anyways. There's been a few SPACs that have been good this year, but some of them not so much. This one, the ticker symbol for the SPAC, the acquisition company, is NGCA, and that is Next Gen Acquisition Corp 2. You can see that they had this wild run up back in June, and then it fell, and then it ran up again on November 22nd was the peak of it. It may look like big moves, but quite frankly, not really. I mean, you look today, today's high was $9.72, and its low was just 73 cents less at $8.99. So those big candles, it can be kind of tricky, right? They don't represent really the price per se. The percentage, sure, but not the price. It was up 2.3% today from its sharp fall yesterday. But the reason I bring them up as a catalyst for Wednesday is because shareholders are going to vote on the SPAC deal to take Virgin Orbit public. Now, Virgin Orbit is a satellite company that was split off from Virgin Galactic, ticker symbol SPCE, in 2017. Virgin Orbit is developing a space launch system based on a modified 747-400 aircraft. The company expects to trade under the ticker symbol VORB after the SPAC deal is completed. So that's one to watch. People like space. It's the next frontier. Okay, we've reached the part of this live stream where I have to say, if you found this video to be helpful, informative, actionable, then click the like button. It doesn't hurt. And then grab the URL and share it everywhere. That really helps us meet our goal of financial freedom for everyone. And if you like my perspective, then click the first link in the description for trade setups, stock ideas, and other exclusive content, including the video coming out either later this evening or tomorrow. Also, you get my top 10 growth stocks, top 10 value stocks, top 10 dividend stocks, which are updated every month, and my top 10 momentum plays, which are updated every week. This is also a great way to help support my research, analysis, and technical breakdowns. So click the first link in the description below to become a Patreon member today. There's a tier for everyone. Now, remember, if it's a good story, has a good chart, it's a good investment. All right. Thank you so very much for watching. And one more thing to say before I go. I'll be back tomorrow, 5 p.m., for another market close live stream. But I just wanted to remind everyone that if you have not signed up for Webull, Webull is running a promotion of 5 free stocks. It is very simple to sign up. Click the second link in the description or the link in the live chat, tickertimenews.com/Webull. Open your account. It just takes a few minutes. Deposit any amount. No more of these $100, $500 minimums. $5, $10, any amount, and get 5 free stocks. That is free money. And as investors, there is no better deal, percentage-wise, right? 5 free stocks, that's free money. It's from Webull. They have a platform similar to Robinhood It's just, I would say, more sophisticated. Gives you more options. The charting is way better. You can use it on your phone, tablet, desktop. As a matter of fact, when we're looking at top performers or top losers, this is Webull. This is what I use right here. So if you haven't already, do take advantage of that offer. It is the second link in the description for Webull, 5 free stocks for you. Again, that's free money, folks. Really easy to do. And that's it. Thank you so very much for the questions today. I love that part of this episode every single day. I love it. I'll see you back here tomorrow, 5 p.m. Eastern, as we talk about the market, stocks, crypto, but most importantly, answer your questions. If you are watching the replay, leave the ticker symbol in question in the comments, and we'll go over it during the show tomorrow. All right, I do have a video coming out later today, and I have a video coming out specifically for Patreon members as well. It's that mystery stock that we talked about when we were talking about Nvidia. So be on the lookout for those videos. All right, everybody. Thank you so very much for watching, and I will see you in the next video.